Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I've got James Gerrish here, our Chief Market Strategist. Now, James, what we want to focus on this week is the telco space, and in particular Vocus. Now, let's kick it off, obviously, with Vocus. Now, the AGM yesterday was on, and the stock was off, 25%. Now, what happened at the AGM to, I guess, lead to that sort of price action?
Yeah, obviously a disappointing update. The crux of it was they missed earnings guidance. So the market was anticipating on an EBITDA level earnings of 470 million. They came in at guided for FY17 of 430 to 450 million. Underlying earnings they guided for 205 to 215. Consensus was at 224. So the revenue line was in line, which was at 1.9 billion. So that's a miss on an earnings guidance level. So when you get a miss on an earnings guidance levels, the market tends to lose a little bit of faith in the numbers going forward, and I think that's what's happened with Vocus. So you get you miss on earnings and you get a multiple re-rate, which has occurred yesterday, and the stock's down 24%, which is clearly a disappointing outcome.
I've got to ask James, with the recent price action, where it's come from, do you think this business is a house of cards?
No, I don't. It's certainly not a house of cards. The issue with the AGM and the numbers yesterday, it was the first time they've issued guidance as a combined entity. So, in a pretty short amount of time, Vocus has made 5 pretty large acquisitions. They've bought MCOM, M2 Telecommunications, NextGen. So they're now reporting on that combined entity. So the market was probably a little bit too optimistic, and we've got Vocus in our portfolio. I own 20,000 shares in my own portfolio in Vocus. So clearly from a pricing point of view, we've got it wrong, and we shouldn't still be there. That's that said, the question becomes now, what do we do with a holding after it's fallen substantially? And you've got to sit back and look pragmatically at where Vocus is right now, the potential growth in the business, the assets they hold, and ascertain whether this is a short-term blip on earnings and whether there's improvement in the business going forward. So that's what we're doing.
Okay, awesome. And I guess currently closed at 435 yesterday. Moving forward, in terms of price action, how do we expect to manage our way out of this position? I know it's a bit of a crystal ball question, but to the best of your ability, what are we going to do moving forward?
So just on yesterday's price action, there was clearly some big lines of stock going out of Vocus. So volume was massive yesterday. There was some large institutional holders exiting the position. If you stand back now and think about Vocus as a business and the multiple, the earnings multiple that's now on. So if they come in at the bottom end of their guidance, they're now on PE for FY17 of 13.6 times. They're still guiding for earnings growth in the low teens number. So it's still going to grow earnings at 11, 12, 13% over the next 12 months and beyond. So you put, if you think about the market, which is trading on 16 times with very low growth, Vocus is on 13.6 times with low teen growth. They're now on a 4% yield, which is on a 55% payout ratio. So they're not paying all their earnings back to shareholders. They're retaining some for future growth, which is a positive. If you go out to FY18, that PE drops to 12. It goes up to a 4.5% yield. On FY19 numbers, it drops to a PE of 10. So the market, I think, is clearly overreacted. So I'm retaining my position. Right now we're retaining the position in Market Matters. It's disappointing, and in hindsight, there should have been there were signs that the company was struggling. There were signs that the company was trading on a reasonably high multiple, and it was too loved by the market. The market was super long Vocus. They've raised a lot of money at higher prices. So the institutions were long Vocus. So you distill all of that down, Nick, and you come up with the rationalisation to say we'll hold for now, and we're not going to get our money back on Vocus. We clearly realise that, but we're going to manage the exit at higher levels than it's trading at now.
Awesome. So I guess just a couple of quick questions. We've got different types of investors that use our service. Like if you're a trader, is it a buy, sell, or hold here?
It's a buy.
Okay. And if you're a sort of a longer term investor, would you average it here, or would you be holding it for now, just waiting to see what happens?
So it depends on the position size you've got in the portfolio. So our issue at Market Matters is we've got 10% in the stock, which is a reasonably high holding. As I said, I own it personally. I've got a reasonable holding. For me, I'm I've got a higher risk tolerance, so I could average it here. Market Matters, we won't be averaging here, simply because we've got 10% in the stock. If you've got a lower holding than that in your portfolio, then it's up to an individual whether they go in and average it or not. All I can say is the proposition going forward, it's cheap, it's got good growth, it's going to pay a reasonable yield, and this, the issue around short-term integration of the businesses, in our view, will work itself out. So to me, it's a pretty good proposition here, and I guess the main point around it is now the market's turned negative. Analysts have turned negative on it, which is typically a good contrarian indicator.
Yeah, fantastic. Okay, so awesome. Thanks a lot for that stuff on Vocus. Now, one last thing, we put a shorter-term trading position in TPG, and that was going fantastically until Vocus reported yesterday. It had a down day. Obviously, it was off 6 or 7%. I'm not sure of the exact number. What are we doing with that holding there? Do we still anticipate that to keep bouncing, or do you think it'll be flat and get dragged down with Vocus shorter term?
Yeah, well, it got dragged down yesterday. So we bought it at $7.15. It's trading at $7 yesterday. We've got stops under $6.90. If you think of TPG, look, there's a couple of, from a shorter term trading point of view, we still like it, but we would be executing our stops if it did tick. If it did close below that $6.90, that's the discipline you've got to have with a shorter term.
Close below, not a stop in the screen. You'd sort of wait to
close below. You want to see a closing price of a stock before making those calls. So a close below $6.90, then we look to exit TPG. So if you look at TPG, it now trades on 15.5 times. So it's a little bit more expensive than Vocus. TPG have the issue around reduced margins under NBN. So there's a little bit of push and pull factors around TPG or Vocus. Whether we whether we look at splitting our Vocus position in the investment portfolio and allocate some into TPG, that's another thing we could look at. So when you get into a position like this, you've got to look at pragmatically rather than emotionally, and that's what we're doing. So we'll look at our Vocus money. And how best can we, should we be continue to hold Vocus the full 10%, or should we allocate some into, other stocks that have been sold down within the sector? And TPG is clearly one we like, and it's on our radar.
Awesome. Thanks a lot for that update, James, and I hope everyone watching got something of value from that. Any further questions, feel free to reach out to us by replying to this email, or you can always jump on the phone and call 1300 301 868. That was 1300 301 868, and that number is toll free. Have a great day.